Hey guys, welcome back to Crypto Insights. The crash in Bitcoin and the entire crypto market just doesn't seem to stop. Prices are falling consistently, and the fear across the market is clearly visible. Last week, around October 11th, we saw one of the biggest crashes in recent months. Bitcoin dropped from nearly $122,000 to $16,000 in just one day, and on some exchanges it even touched $12,000. Since then, it's tried to recover a bit, but once again, selling pressure is increasing. Recently, Bitcoin revisited the $13,000 zone, and now it's struggling to hold that level. But there are a few bearish technical signals that are worrying traders. Bitcoin had been maintaining an upward channel for the past 6 months, and recently it broke down from that channel. Not just that, it even fell below the 200-day moving average, one of the most important long-term supports. So the question is, should we really be worried? Let's zoom out and understand what's creating this pressure. First, Bitcoin ETFs have been aggressively selling. Over the past few days, nearly 44,000 BTC, worth around $400 to $500 million, have been sold off. Even institutions like BlackRock have been part of this wave, adding heavy downward pressure. Second, global political uncertainty is playing a major role. Statements and policy shifts from the US leadership keep creating confusion and volatility in global markets, and since crypto trades 24/7, it reacts immediately. Large whales and institutions are using this uncertainty to build massive short positions, adding fuel to the fire. On a positive note, though, there's still hope that the Federal Reserve might cut interest rates soon, possibly by the end of October. If that happens, we could finally see some positive momentum returning to the market. Interestingly, gold has been performing well during this uncertainty, and historically, Bitcoin tends to follow gold's trend eventually. It hasn't yet, but there's potential for correlation to return in the coming weeks. From a technical standpoint, if Bitcoin's weekly or monthly candle closes above the 200-day moving average, that would be a bullish signal. Historically, Bitcoin often tests this level, but rarely closes below it on the monthly chart. Short-term, the $11,000 to $12,000 zone remains a strong support area. If October's candle closes above that, we could say this was just a shakeout before the next recovery phase. The Fear and Greed Index is currently around 25, which means extreme fear, and as history shows, such phases usually mark accumulation zones before a recovery. Now let's talk about Ethereum, Solana, AD/BNB and XRP. Most of these are sitting near their key support levels. ETH looks solid between $3,200 to $3,500. Solana around $170 could be a great entry zone. ADA, BNB and XRP also appear stable for long-term investors. Among altcoins, projects like SUI, NEAR, ARBAR, Gala and AT are trading near their bottoms. When everyone is scared, that's usually when the best opportunities appear. Once the market recovers, these coins often bounce the hardest. A quick word of caution: avoid leverage trading in such conditions. If you're holding in spot, there's no need to panic. Every major crash in crypto history has eventually led to new all-time highs. So yes, it's a tough time right now, but tough times don't last forever. Stay strong, stay informed, and stay patient. If you found this analysis helpful, make sure to like, share, and subscribe for more real-time crypto updates. And let me know in the comments, which coin do you think has the strongest recovery potential this month? That's all for now. Take care, stay safe, and I'll see you in the next update.